All right, welcome back to Market Day Report. I am Scott Shellady, still the cow guy. Thanks for joining us here this morning. Let's take a look and see what's going on with these markets. We're getting a little bit of a bump. It's going to make it easier for me to keep you around, I think. DEES is up 20.5 cents. Look at that. Got a 7 in front of it now, folks. 703 3/4. The reason why that's significant, and I'll talk about this probably all week, but there's massive open interest in that $7 strike in DEES options, right? That's going to act as a magnet. We'll see if it sticks around there. 704 1/4 now, up 21 cents. 18 1/4 cents higher in that March contract to 709 1/4. Moving right along, as they say, to the soybeans. What do we have happening in the soybean pit, which used to be right next door? It's a short little walk with my short little legs. 21.5 cents higher in that NOVE contract. 1388.5. Look at that. We were one tick away, or a penny and a quarter away from 14 again. So we were trying to get up there. We didn't quite make it. Sank back in. 1388 3/4 is last. 19 3/4 cents higher in the Jan right behind it. That's going to put a 14 on it, I think. 13.99 is last. Let's take a look at the Chicago wheat market. This is one you got to put your seatbelt on for. There you go. 61 cents higher in that DEES contract. 941 1/4 is last. We've been as high as 944. That's about, what, 3 3/4 pennies ago. We got 59 cents higher in the March to 954 even. So good gains, very good gains when it comes to wheat in Chicago. That'll probably play through all the way to, say, even the hard red wheat. HRW down in KC. 58.5 cents higher, 1027 1/4, only 2.5 cents off the highs there. 56 1/4 cents higher in the March, 56.5 now, 1022 3/4. So some good gains, great gains actually. If you're a producer, if you're a consumer, not so much, right? Let's take a look at what we've got going on in DEES wheat, spring wheat down in, or up over in Minneapolis. 45.5 cents higher, 1013.5. Look at these numbers. 44 3/4 cents higher in the March right behind it. 1020.5 is last there. And then finally, let's see what's going on. Cotton's been getting beaten up as of late, but today it's doing all right. 311 points higher. It's 87.34, which gives me the opportunity to bring in our next guest analyst in studio, Mr. Chris Swift from Swift Trading.
Good morning.
Well, I tell you, it just seems like every Monday morning we wake up to more stuff like this. So, How do you hold the hands of all your customers through stuff like this? Because these events are kind of binary. It's not like you can kind of hedge for them, right? It either is or it isn't, right?
Well, in the grain markets, we've been in an uptrend for quite a while. Ever since we made the lows back in August, we've been kind of creeping up ever since then. And we're pretty much friendly to the market simply because we don't believe that there's as much crop out there this year as what there was last year. And clearly the prices between December and July, there's no incentive to store whatsoever, and yet they're still not selling at the same prices that they could, storing out 9 months. So I think there's a shortage out there. It's been creeping up. The wheat market probably the most volatile simply because you have drought here in the United States and Russia able to undercut world wheat prices at any given time.
And, I can tell we're in a crazy scenario when I got reports last week from my guys up in Chicago. We had one of them on the show. But in that March wheat contract, right? So March wheat, let's say it's trading $10 even. We'll give it $10, but it's not. There was a big call spread purchased on Friday, and it was the $25-$30 call spread. $25, $30 call spread. 225 times for 7/8 of a penny. When you got stuff like that happening, you're kind of in for it. Not that it's going to get anywhere near there,
right? But
when that's happening, that means that the world is pretty uncertain.
Somebody's thinking about something out there,
and I think that somebody's thinking about maybe some sort of nuclear conflict. I think that could be the case. I mean, that would be the only thing that I could think of that's going to make it rally 15, 16 bucks.
It's always possible.
So, what about the economy? Where do you stand with that? I mean, how do things look for you there? Because we're going to talk about that in the next segment with the meats. But what do you think?
Friday probably did the consumer very good. Everybody's more employed now. It's a double-edged sword for the cattle feeder because now we understand that with more people employed, clearly more people would be able to afford beef or be able to be willing to pay a higher price. But then we know that it probably gives the Fed ammunition to quell rates again, to increase rates again, trying to quell inflation.
Well, there's something fishy about those numbers because we've now got 50 million more people working than we did in December of 2019, right before we went into the pandemic.
All right.
But we've added 225 million people, 2.25 million people to the rolls. And so where are they all going?
I don't know.
I don't either. So, all right, we'll talk about that over the break,
okay,
maybe, all right? We're going to go away. We're going to pay some bills. We're going to come back and talk more with Chris Swift. Swift Trading after this. All right, welcome back to, let's see, what do we got? Market Day Report, I think this show is called. Let's take a look at what we're going to talk about, the livestock. We've had Mr. Chris Swift stick around for that. Let's bring up live cattle in Chicago and see what those prices are. We were a little lower here. They don't like the higher prices in the last segment. We've got December. Let's go there. $1.17 lower, 146.87. And that's not too far. That's about 15 cents off the lows. So that's trading heavy. Feb's down $1.20 to 150.55, and that too is real close to the low. So they're both trading heavy as we move on to the feeders. Our feeders leading to the downside. Oof, they are. November's down $3.22 to 172.40. That's off the lows by about 22 cents. But we've got Jan down $3.10 to 173.50. So feeders do not like that higher corn board. How about lean hogs? They were higher earlier. They still are. We're bleeding a little bit out the deferreds, but we've got, say, December up $2.52. That's some pretty good going. 79.67 is last. And we got 81.37 last in Feb hogs, and that's up $1.42. All right, 90 seconds. What do you got for us?
In the cattle market, probably a lot more of the same, with not many people wanting to pay the higher prices on the retail side of it. You got plenty of cattle coming in to be killed because of the drought, moving more cows and heifers on. You're robbing the back end of the supply chain. Everybody realizes that, but there's not much you can do about it until the spring, where we can start in with greater pasture conditions, some hay production for this next summer. So there's really, everything is pretty much on hold of going to be feeding some very high feed costs over the wintertime, and then maybe some little bit higher cattle come this spring.
You know, there's a lot of folks out there, that's an understatement, but that are much smarter than I, right? If they're calling for some pretty tight economic conditions next year going into next spring. If we had really tight economic conditions next spring and at the same time we had no beef around, what happens to those prices?
You know, I'm not real sure, because expansion really can't take place until we get Mother Nature to say so. And so as long as we continue to have more beef coming onto the market through our cow and heifer, we don't have any problems right now. When we get into problems where we do have shorter supply, and if we were to have some kind of economic issues, it'll be dicey to say the least.
Yeah, we can't keep killing those mama cows, right?
Yeah,
we can't keep killing the factories, but I guess I get it, and that's the unfortunate thing. Well, it's been really great having you come in.
Pleasure, Scott.
It's been fun sitting in for Marlon too, so I really appreciate it. That's Chris Swift, Swift Trading. He doesn't do it for free. Got to give him a call. He knows what he's talking about. All right, I guess I could throw this back over to Jenna. That's what I'm supposed to do now, right?